Welcome back to Turning Hard Times to Good Times. I am your host, Jay Taylor, and I'm really pleased to have with me once again Amir Adnani, the Executive Chairman of Uranium Energy. And Amir is an entrepreneur, is a mining executive. I've known him for a number of years. He's actually the founder of Uranium Energy and president and CEO of that company as well. And, he has just done a remarkable job over the past 13 years or so of assembling assets that I think are going to be extremely valuable. You just heard from Michael Oliver why he thinks that we're getting ready for a major run in uranium. And we're going to talk to Amir now about what are some of the fundamentals that are underlying this commodity that has been so out of favor for so many years. Amir, thank you for joining me again.
Hi, Jay. Good to reconnect.
It's really good to hear from you, especially now that things are really heating up in the uranium space. Very exciting times, I must say. I should tell our listeners, Uranium Energy trades in the New York Stock Exchange under the symbol UEC. 176 million shares. I saw it trading at $1.22 in U.S. funds, near its lows, I must say, giving it a market cap of around $200 million, a little more. Cash in the bank of $24.5 million. So you seem to be pretty well set, Amir, and I want to ask you, since our last interview in April, uranium has been one of the best performing commodities. It's risen from $22 to $29. What have been some of the key drivers of the stronger uranium price so far in this year, in 2018?
It's been mainly driven, Jay, by supply cuts. We've seen the world's biggest uranium producer, the Canadian company Cameco and the Kazakh company Kazatomprom, basically shut down mines or reduce production from existing operations. And these supply cuts, coupled with new financial entities that have been created to buy physical uranium as an investment, a buy and hold strategy, which means less uranium available to utility companies to be able to purchase for consumption or power generation, has really kind of created a bit of a perfect storm by taking material off the market. And it's more so than any other time in the last 7 years that we've seen. Obviously, 7 years being kind of the mark of when Fukushima happened, which is where the troubles in this industry kind of began. But Jay, I feel like we've really turned a corner. I mean, this is the first year where global nuclear power output is greater than it was pre-Fukushima. This is the first year that we're seeing a supply deficit in the uranium market since Fukushima. This is the first year where we're starting to see financial players, hedge funds, and other entities that have been created to buy physical uranium. That was an important feature of the 2005-2006 market when we saw the uranium market price rally from $20 to $140 per pound. And so here we are hovering around 29. As you point out, we're up nicely from $22 per pound since the last interview you and I did in April. But the drivers are real, and you know this in any commodity. When the drivers have to do with fundamental supply-demand, less supply and growing demand, it's the basic recipe for underpinning a nice rise in any commodity, and uranium is now finally benefiting from that.
Yeah, and how many producers? I mean, we're looking at the current price of $29. What percentage of production can be produced at a profit with $29 uranium?
Most production in the world is not profitable at $29 uranium. And the best way to understand that is how Cameco, as one of the big suppliers, shut down its best mine, McArthur River in Canada, and instead is entered the spot market to buy physical uranium to deliver into long-term contracts they had. So nothing spells, we've hit rock bottom with the commodity price when a supplier is electing to buy that commodity that it's supposed to be producing and instead is elected to buy it in the market. And it's a very fascinating picture to be looking at. And you just know it's a matter of time before the price gains stronger momentum. But some of the political developments in the U.S., I think, have really sort of slowed down this move in the uranium market.
Okay. Talk to us about that.
Well, I think the last time I was on your show, you and I talked about how the administration in the U.S. is really investigating the U.S. overdependence on foreign uranium.
Right.
And this is a big issue because right now, 98% of U.S. uranium requirements are not mined from U.S. sources or U.S. projects.
98%.
Okay.
So where are we getting it?
It's coming from all over the world, but 40% of it is coming from Russia, Kazakhstan, and Uzbekistan. And Canadian share of that has gone down because even the Canadians can't make money at these uranium prices. So again, as I mentioned, the best mine in Canada, McArthur River, was shut down. So there's a serious overdependence on these foreign imports. In late July, the U.S. Department of Commerce launched a probe into the national security matters because it really is about energy and national security when you talk about uranium. And the conclusions of the report are expected to come out by or before April of 2019. So we're not that far away. And a final decision is to be made by the president by or before July of 2019. And it may be a combination of tariffs or quotas. We don't know. We have to wait and see what happens. But it's created some uncertainty. The rules haven't been spelled out. And so as a result, despite the fact that the utilities should be buying more uranium here, they sure as hell should be buying ahead of Cameco buying and delivering to them. They simply have been almost frozen out of the market, Jay, because they want to wait to see what the outcome of this action by Department of Commerce and ultimately the president will be. Now, this is the same procedure that was taken for steel and aluminum. This is the same procedure that was looked at in some other instances as well, other industries, that Section 232 process. But I have to tell you, in the case of uranium, we feel, and we've been told by a number of analysts, that the merit of the case is even stronger when it comes to truly being one of energy and national security with this 98% of requirements not being mined here. So it creates a very interesting catalyst going into 2019, but you can appreciate why it has also almost frozen the market a bit while it's a pending issue.
Mm-hmm. And it's not just power plants, Amir. I understand the military and the nuclear-powered submarines and so forth. It's really a very crucial metal, isn't it? I mean, it's not just power plants. Power plants is significant enough. I think we get about 20% or so of our energy from nuclear power in the U.S.
20% of power generation is coming from 98 units that are operating in the U.S. That's the biggest nuclear fleet anywhere in the world. And they need 50 million pounds of uranium annually. And U.S. production this year will be less than 1 million pounds. That's just for power generation. On top of that, the U.S. nuclear Navy, we're talking about aircraft carriers and submarines that run on nuclear power. They also require uranium. But under all the international treaties, the U.S. nuclear Navy needs U.S. origin uranium. Not even Canadian mined uranium could be used for the needs of the Department of Defense. So this is another element of why there really is a strong national security case to be made for the uranium situation, and that's why I think it's a very profound catalyst going into 2019.
Okay, you just raised $20 million in October. You had a strong demand for that. I think it was oversubscribed. You got a strong balance sheet. As we noticed, you have something like $25 million in cash. What are your plans for as we go into 2019? And let me ask you, what sort of price of uranium do you need to turn the lights back on to start producing uranium again? Because you are ready to produce, as I understand it.
Well, we're in a very unique position because back in 2010, we became a uranium producer after executing very quickly from the first time you and I met in 2005. The company executed, and 5 years later in 2010, we became the newest uranium producer in the U.S. at the time. And so we gained the expertise, the know-how, the people that we assembled our team with, and the permits and the infrastructure. All of that underpins the key competitive advantage we have today as a company that has production readiness that can get back into production quickly. we've used the downturn during this period where it just didn't make sense to mine more uranium and deplete our resources. We've used this downturn to make acquisitions, very accretive acquisitions of projects in Wyoming, in Arizona, and Colorado. Our project in Wyoming is fully permitted. So where it takes 5 to 7 years to permit new uranium mines in the U.S., we have the first mover advantage because we have the production readiness, we have the track record, the proof of concept, and people that can really help us navigate the U.S. market. From the chairman of our company, who's the former U.S. Energy Secretary, Spencer Abraham, who's also a former U.S. Senator, the executive VP of our company, Scott Melby, who's the former president of the Uranium Producers of America, former president of Cameco, to our team in Texas and Wyoming that, again, have demonstrated their ability as we built our mine and in the past the many mines that they've been involved with building and developing and exploration expertise as well. So I feel the money that we raised in early October, Jay, completes the picture. We have a company that has a strong balance sheet with $24.5 million of cash on hand as of our latest filing, a company that has the assets, the permits, and the people to really be in a leadership position as we anticipate a real significant resurgence of the U.S. uranium mining industry. We were last mining uranium at a price of $40 to $45 per pound, and we will want to see that same price point as a trigger to get back into development and production.
Okay, that's what I was going to ask you. 40, and you mentioned there's only a million pounds that are produced in the United States, within the United States. How much will you be able to produce when you go back into production?
Jay, our processing plant in South Texas, Hobson, has a physical capacity of 2 million pounds per year. Our Reno Creek project in Wyoming has a production permit of 2 million pounds per year. So we have a production profile of 4 million pounds per year that we would want to work towards realizing as we ramp up in South Texas and build new projects like our Burke Hollow asset and develop Reno Creek. But that in itself is, again, a very unique position. I can't think of too many junior companies that are in a position where they can point to a processing plant and permits in hand and a production profile that could be realized with that advantage in place, the facility and the permits. But more importantly, Jay, remember the method of mining uranium that we use, the in-situ recovery method, is really proven to be a low-cost and environmentally friendly way of mining uranium. This is not strip mining. This isn't sort of, the way that really would require significant capex with open pit and underground mining. This is in-situ recovery. It's got the lowest cost kind of profile in the industry globally. The U.S. has been a leader in this type of mining uranium for decades, and so it really plays favorably also into our hand that the deposits that we've acquired and developed in Texas and Wyoming are amenable to this type of mining uranium.
All right. Well, just with a minute left here, you mentioned that the U.S. needs 50 million pounds a year. You're up to 4 million. Someone else is producing 1. Tells me there's still a major shortfall. Do you see a lot of exploration potential, Amir, so that you can ramp up beyond 4 million pounds a year?
Jay, I see substantial exploration potential. The U.S. has not been properly explored for uranium for decades. All the modern exploration tools and techniques that have been deployed in mineral exploration globally in the last 5 or 10 years, they've never been properly applied to uranium exploration in the U.S. All projects that we have and anyone else has developed are from the previous cycle, 30 years ago or so. I think there's incredible potential, and the Canadians have shown that. In Canada, there have been wonderful discoveries made in parts of Athabasca Basin where people thought there was never any uranium, and in the last few years there's been substantial discoveries made, and I think the same potential exists in the right basins in the U.S., like the South Texas Uranium Belt and the Powder River Basin of Wyoming. The U.S. Geological Survey has published reports about this, saying that undiscovered ISR amenable uranium resources are available and are, again, significant in places like South Texas. And this is exciting to think about. There could be a real renaissance here in uranium mining. This used to be a big industry in the U.S. Back in the 70s, there were over 20,000 people employed. And so there's a real room for growth here in this industry.
Okay, we'll have to leave it go at that, Amir. Thank you so much. A very exciting story, I must say. I hope our listeners will pay some attention for their own good. Thank you very much for being with us, and we'll look to keep up with you in the future.